great to have you all out here tonight with us as Massive Capital goes through discussions a little bit about kind of shifting sometimes or reallocating and or just covering your bases. Some of us come from a combination of, we have a number of people on our team that are engineers and others that are MBAs. We also a few of us are from the oil and gas sector, and I know we have a lot of extended partners that fall into that, and just kind of share a little bit of journeys with y'all tonight. So one of the things to start with is we are not lawyers, CPAs, or any of the other. So we're not providing financial advice. We're here just sharing our experience and knowledge as we have come through our journeys. And so from there, let's go. Shariah, you want to do the team intros and discussion there a bit?
Yeah, absolutely. So let me intro the team, all right? Or Trevor, you want to start off, then I'll get into the rest of the team. I'll back them up. That's okay?
Yeah. Sure. Yeah. You want me to start? Obviously,
yeah,
not introduce you, but Sanjay. Sanjay Agarwal, he's based out of Dallas, and he's been doing apartments and real estate investing for a long time. And interesting story, he was actually the person that I made my first passive investment with 5 years ago. So it's quite amazing how life goes full cycle. You're going to hear more about Mike and Shrar in a minute. I'm Vice President Investor Engagement. We have Jen Brown, Jasmine, Maria, Ramesh, Bhaskar, Candice, Jonathan, Angela, and both Brad and Senate are invisible right now. They're getting their headshots done. I know Brad got one at Best Ever, or Senate did, so he can send that. And we keep adding to the Massive Capital team, and we have a lot of partners that we do deals with. So it's definitely in expansion mode right now.
Thanks, Trevor. So for us, it's interesting how I met Sanjay. I have been working with a common friend of ours, Ajit, and he has been 100% of the deals that I've done. I have done with him, and all of us came through him. And it was interesting. I knew Sanjay exists. I heard his name for 3-4 years. All I knew about him up until 2 years ago when we started working together is that there is a guy. He lives in Dallas. He comes to Houston. In 2 days, he walks 4 or 5 properties, does his thing, then he goes back. And he does it probably a day or so. And that's all I heard. And I thought that was a pretty cool guy who can drive 6-7 hours a day and knock everything else out and go. So the first time we walk an asset, all I knew he was coming. I didn't know who he was and what it is. And he lives in Dallas. So we go look at a property in LaPorte around 10 o'clock. I'm late. Mike was there. Sanjay was there before everybody else. And the joke became that he comes from so far away and he was the first one into the property. So, hey, Sanjay, that's how we met Sanjay. But in the rest of the team, I think a Massive is a JV heavy, a partnership heavy. We invest in people rather than, I would say the project is secondary. So everybody here that we have worked with before, we have seen each other's work, and we believe everybody here, we have a high regards to everybody else, and that's how we built up the team. And that goes for everybody. I mean, Trevor, anytime we have a property, before even underwriting, we give him a call and say, Trevor, what is your underwriting? So we have an underwriting Model T, right? Which is called Trevor, and he knows most of the time, who has done the deal, who did the deal before, is it good or bad? So that's interesting to have that kind of a knowledge base in our team. So having said that, everybody here is fantastic. Ramiz, just quick rundown. Jen, we have seen Jen work for almost a year. Jasmine over 2 years. Maria is the similar time. Ramiz has been with me about 3.5 years. And then Bhaskar and I worked at Shell before. He was our FO, which is the finance offshore. He supported Shell downstream. So we'll talk about him before and more for about 3 years. Then he left Shell, became an expat, went to Dubai. Then at some point he felt homesick. Then we talked to him. He said, come back to India. We'll hire you as an expat and run the finance shop. So he does all things underwriting from India. And the coolest thing about Candice right here, she ran for office. I don't know. I mean, I'm yet to meet somebody who ran for office, and Candice ran for office. And Jonathan is a legal, is our in-house legal. Mike, do you know whether he filed for Texas? He can practice in Texas now, is it right? And Colorado and Seattle?
He's still in the process of
Okay.
his barring in Texas right now.
Cool.
Yeah.
And Brad, we're extremely happy that Brad decided to join us, and also Senate. We have lots of things in the pipeline, so we are really excited as the time goes on. So, Mike, back to you. Are we going to talk about it here, or we do that the whole Q&A process as we go, right?
Yeah,
Okay.
yeah. We'll this one I think as well, Shrar. Jump on this one, and then I can go
Okay.
forward.
So on that note, for us perspective, when we built the team together, we wanted a little bit more tool in the toolkit. That means, market will swing. It's going to go up and down. We're going to go through rough times, then we'll hit the up time. Based on that, we wanted to build a team that has skills across all the value chain that we have. So we get to play a little bit more, or we get to have a little more extra cushion compared to the market. So when we look at all of our deals, we are finance first. That means understanding the market cycle, then the debt cycle, and then the property. So it's a little bit more different way of looking at the projects. That means if the market calls for to buy Class A today, we'll do it. If the market calls for to buy a Class A today, we'll do it. If the market calls to buy land, we'll do it. It just depends on the understanding that way. So us three, Mike, Sanjay, and I believe last time I tallied up, last 5 years, we bought over 300 properties across all asset class. We buy land, residential, then small strip center, office, and then apartments as well. Sanjay works as CEO. He brings in the operations. He's has been real estate, on the multifamily for 7 years. I come in as a CFO for finance and strategy side of it, and the team development. Mike comes in all things money and the CIO perspective. But for us, personally, we have bought lands. I personally do land banking, haven't done land development, but then we bolt on to someone who has the skills to do that. So our philosophy is that we don't do a deal where the team cannot say, we have been there, done that. That's our first check, right? If the team cannot say we have been there, done that, then probably we're not going to do that deal. It doesn't matter how cool the deal is. And that's why we partner. Wherever we think we don't know, we'll go reach out to the right set of people who has been there, done that. So when we bolt on the team, it makes sense. So we buy land for new construction. We also do value add. And also we look for Class A assets as well. So across the value chain.
Thank you. And
right.
Yeah.
So we are again finance heavy. So for our philosophy is that we're not going to do anything new. We're going to copy somebody's path. So we have 4 big advisors behind us that we keep extremely close relationship to a point. On average, we talk once a day and a half, I would say. And everybody has been there, done that. Means that they have had a portfolio at least at 300 million for at least 5 years. Then we get to say they're senior advisors, and we have 4 of those folks that are behind us. They advise us, and based on our analysis and their conversation, based on their performance, we picked 6 markets and we went simultaneously into those markets. That resulted about $106 million worth of assets, a little over 900 doors last year, and we have 2 properties under contract, and we closed the Austin deal yesterday or day before yesterday. So that's a land for new development. And then we have 2 other deals. Now, again, full disclaimer, it's not a pitch, it's just a conversation about what's going on within our organization. So those are 5 or 6 B assets, that's all. And that was last year. And we bought.
So Schreier, I missed here as well. We were actually under contract on a third, which is our X-Base opportunity property, right? So.
Thank you, Mike. Okay, so yes, we have 1 out, 1 in, so net we are same. So that's where we are. But for our philosophy has been that do at least stay close to the market. So even though we bought a lot of assets last year, from Q1 till Q3, we did not buy anything big. That was a tactical choice we made, and that choice was market was going high. How high it's gonna go, how fast it's gonna go, where it's gonna land, we didn't know. And so we decided to cap everything by getting a fixed debt. And the moment we get a fixed debt, as you guys know, Or some of you all know that we cannot buy anything on a pro forma. It has to be an actual. That means you have to buy a small. That means you got to get a recourse loan, all this other stuff. So we ended up doing about 5 recourse loans last year, 6 recourse loans, under massive, plus more under us. And then Q3, when the market turned, means at a Q3 when that speed slowed down, we decided to go back in and buy on a bridge debt or on a floating debt or larger assets. So now by design, we're not doing any more recourse loan on existing assets. We'll do on the land, but we're going to look at assets now, which is non-recourse, big deal. So it's, again, finance kind of kicks in quite a bit, and that sets the stage what type of asset that we take a look at it. So, next slide. All right. Okay. Back to, okay, this is partnership, right?
Yeah.
Want to talk about it?
Yeah, I'll talk on this a little bit, and because I wanted to talk about this even more later. So it's as you work through and you get into real estate, there's a lot of different types of real estate. Obviously, we're focused in apartments, which is multifamily. We still do other things if they make sense, but they tie up towards multifamily or apartments, or maybe storage as well as one of the areas. But as you go through that, there's areas when a lot of people ask, hey, how can I join you? What do you need? And what I tell people is, don't make me do the homework. Don't give me the assignments. Let us know what you feel you can do. Where do you fit? What's your superpowers? What are your strengths? And then this is just to give an idea of what are some of the areas that typically add or bring value to a deal, to get just starting at a basis point. So just want to share this for people to have and think about. And on our side, from partnerships, we have the opportunity to come in as loan guarantor. We can come in with EMD, earnest money, that is equity, risk capital, and then do the contract to close process with you or beside you, and as well lead on asset management going forward. And then on the other side, we want to continue to help people grow. So part of that, and we'll talk about that a little bit, is we're starting up a program, an education program as well, but it's all directed towards enabling partners. So how can we help people accelerate, enable them to either be a GP if they want to do that? And I'm going to talk more later about really what it means to be a GP, though, because it may or may not be a fit for everyone because of the work required and some of that. But that is areas that we do add value to strengthen the community.
It's Mike, just to kind of twist it up. We're an accelerator platform, like a Y incubator for all the up and coming GPs. We tend to think that way. I think, and also for the audience here, we'll talk about it more. I think all of us, between you and I and Sanjay, we have done multiple businesses, right? This is Mike, how many? I don't know how many, 6th or 7th company, something in that fashion.
Yeah.
Sanjay has a whole bunch, right?
Yeah.
So, that whole startup mindset comes in quite a bit. It's our philosophy that we're LP heavy. We invest as well with the all the other LPs. So LPs are hiring the team to do the work for 5 years. So it's a job at the end of the day. So contrary to the other folks, and that you're going to hear that, hey, it's cool to buy, and then want to buy, what happens, right? So for us, it's a 5 years commitment. We don't need no help. It's 5 years of commitment, and everybody has the roles and expectations, and we get assigned to it. Just like the sweat equity, every year we accrue our portion of it. Once you deliver, everybody's happy with it. So it's an interesting way of taking a look at it.
Yeah.
Back to you, Mike.
No, it's good. So just this was really where I was leading into with that. Some of the, we talked about, we have a lot of deal flow. We're trying to work through that. We're, spending time looking at the opportunities that people bring to us. Brad Pickett joined us, and that's been a big reason, is to, take over, manage that deal finding process, and be sure not only, that we get a chance to look at every deal and see if there's good, great deals out there, get through them, but also, be of service back to others that are bringing in things and wanting to look at opportunities so that we can, get back to them quicker and, be of more service going forward. And this is on the right side is like, that is our running spreadsheet of what we look at from what's under contract, what's in underwriting, what's got an LOI out on it, and what's archived. So it just gives you an idea of what we go through there. We are opening our fund in April, so be looking out for that. That'll be our first fund launching, so that's exciting for us. And just on a basis, continually, and we'll post here in the chat again to sign up for our portal and take a look at our deals that are available. But we'll have 2 to 3 opportunities continuously coming around on the board, we say, are available to invest as we continue on. And the last thing, like I mentioned, we're going to be rolling out soon in the next week, I believe. Senate Eskridge is leading that for us to roll out our massive multifamily movement, which is M3 educational platform. That we're not trying to replace any of the big ones out there. We just want to become a lab for people to work in and do deals and participate more. So that's really our focus. And so thank you. Yeah. Trevor, you want to give an update here, sir?
Yeah, so very exciting. We closed on a 10-acre land deal in Georgetown, which is actually 30 minutes from my house. We do have 1 spot left. So if you are an accredited investor and you're interested in filling that last spot, this is a land acquisition deal where we buy the land and get it ready for the next phase, which is development. So it's a land entitlement, and it's a nice short, quick return. We'll be done within 2 years. We're projecting about a 20% IRR and a 1.45 multiple of your money. And we do have a 7 prep on this so that investors get paid the first 7% of the deal. So if you're interested to fill that 1 last spot, don't miss out. It's going to fill up pretty soon.
Hey, Trevor, did you see what I did at the very end? The closing date? Did you see it?
No.
I was kind of messing around with it. You see it?
Oh.
So first land deal on the 20th, I kind of stuck in the A1 in there just to kind of mess with it.
Yeah, the first on the 20th. So no, that's exciting. It is great. And then we have
Yes, so we have a couple of deals that are, but they're 506B, which means we can't publicly talk about them, but both of them are great opportunities. So if you are looking for a great multifamily passive investment, reach out to someone that you know on the massive team. And if you don't know anybody in the massive team, reach out to us anyway, so you don't miss out on the next one. So we can have to only offer these to people we have an existing substantive relationship with, but both of them are good deals, but you need to make sure you have a relationship.
Thank you, Trevor. My internet got a little glitchy, so I kind of stopped there for a second. My screen, my video. I'll try it here again. And if I lose it, sure, I guess you guys will just take over anyway. So I guess we'll jump into a little bit of the topic, and I stole some things from last week's webinar that we did, which was on asset management. And what I wanted to talk about was, so I'm going to share a little bit about my background, and then why I shifted, and then just some things to think about when you're thinking about shifting, and whether it's directly investing, whether it's investing passively or actively, or whatever you're looking to do as you go through that. So so one of the things I stole was this. I think Sanjay had this, was about what does asset management do, but I was just thinking, what is the most important thing to us? And it's that every investment is profitable, right? That we want to be sure we're making profitable investments. And so that's one of the areas I want to that we'll be thinking about and as we go forward with the discussions. So I'm going to leave this slide here on while I talk a little bit. Or actually, let me stop share for a minute. Do it this way. Yeah, I'm going to stop share. So one of the things I'll share a little bit about my background and history. Some of y'all may have heard, not heard, and it's just kind of, you know, see the path that I've gone through on this. And it kind of, I guess, will give a little light as to what is opportunity for some and what, you know, goes for others. So, you know, I grew up in a small town, Southern Illinois, I call it. Town that's called Oblong, Oblong. So it's like the only one and only. I grew up in this town, village, Kyle calls it, my son is Kyle. Village of 1,200 people. So it's, you know, very small, and grew up, you know, farming and working on, actually working in oil and gas wells. My family, my grandfather, my father both worked for Marathon Oil Company. So that was always, you know, kind of an interest, and engineering was always an interest. So it just led me down a path that I wanted to follow, and I went towards the oil and gas. And for those in Texas, I live in Houston now, which is the first time I lived here, and I moved here about 6 years ago. So spent, you know, 50 years, 40 plus years not living in Texas. And the reason I mention that is because everybody's like, you know, I went to petroleum engineering school, but I chose Oklahoma, and it's like, why? And I don't know. I just didn't want to be maybe swallowed up in the grand thing of Texas and everything it is. So I went to Oklahoma. I guess it worked out for me though. So University of Oklahoma, a Sooner, graduated from there, and went to New Orleans. Was my first assignment in corporate America as a full-time. I did a couple summer jobs. And it also was my first international assignment. So you think going from like this small little rinky-dink village in Illinois and ending up in New Orleans, you know, I thought Norman, Oklahoma was big, and then I thought New Orleans, wow, this place is huge and this is different. And it was very interesting.
Hey, Mike.
Yeah. So, you guys hear me okay?
Yeah.
Oh, okay. So I went from that, and then actually Lafayette, Louisiana for a while with ConocoPhillips, and was, you know, learning the whole thing of being an engineer and what that meant. And I loved my job, actually. I never thought I would do anything different. You know, I was never really interested in being an entrepreneur at that time. Then international came along, and I had spent 20 years international with a couple of companies between ConocoPhillips and Schlumberger. And between those, I worked, you know, lived in about 10 different countries, worked in about 20, and visited about 70 plus countries over that time. And it was just amazing, you know, I started down in Venezuela, then Brazil, then Mexico, then went to Asia, Indonesia, Malaysia. My son Kyle was born in Singapore, grew up overseas as well. I spent some time working in Russia, in Sakhalin. Spent, you know, as well. Then we went to Libya. Got evacuated from Libya, which was exciting. Evacuated from Indonesia at one time. We ended up in Norway, and eventually back to the US and then to Houston for the first time. So, you know, as I said, it was a great career. And what it gave me though was I didn't ever get into real estate in depth. I bought some houses along the way, was like, you know, a hobbyist. And I didn't actually realize what I was doing and accomplishing until later down the road, actually just a few years back, maybe 5-6 years ago, I realized the value that it was creating, and that I should have leaned into it even more. And that was what got me excited to go into what's called multifamily or the apartment investing, because then I saw, okay, I can do one house and how that works and the work it takes. But if I buy, an apartment that's got 100 houses and 100 units, I can kind of do about the same work, to acquire it, operate it, and then I get some other people to help me operate it. And just the scaling factor and the value that was added from doing that, I realized, this is where I wanted to go. So after a while, I started investing, and I started my first investments as an LP, and eventually moved on into being a GP. And we'll share and talk more about those if we get a little time here. So the idea I wanted to get out was just a little bit of my background, why I shifted. I love the oil and gas, and there's great investments. I think there's opportunities in oil and gas. I just chose, more into the real estate. I understand, I can touch it, feel it, it's tangible, and there's an opportunity for everybody, to be a part of this. And that's the thing, that I can now help others to be real estate owners on a larger scale even than they thought or believed they could initially. So that I'm going to stop with that, and then Shariah, I don't know if you got anything you want to jump in with, and I'll go back to the presentation as well.
Mike, would you mind talking a little bit more about what sector of the upstream you worked on, if you don't mind?
Oh, yeah,
specific, the technical person of it? It's been exciting, but hey.
Yeah. So I worked in, so I was a drilling engineer, drilling completion operations. So spend a lot of my time on the drilling rigs, like Mr. Lev Cooper, but I didn't own my own units. So spent a lot of time going offshore, flying around, which was, it was really cool environment. I did like my first seaplane ride was right out of my back door in New Orleans. And we get on the seaplane, I just drive around the corner. I get on the seaplane, they fly down the levee, the waterway, and take off and land down near Grand Isle in Louisiana. And then we catch a helicopter and we're going offshore. So yeah, it was that. And then I spent a lot of time doing land operations in the middle of Brazil. So it was a big variety. We were starting up operations a lot of times, building teams, building processes around those teams, and structuring up different opportunities, internationally, continuously. Thanks, Shariah.
No problem. I mean, it's a lot of time that we spend in our corporate world, right? So
yeah.
Cool. Yeah. Okay. Maybe I'll talk a little bit about my corporate side and how I got to the real estate. Then we can kind of do the Q&As, right?
Yeah.
Or ask each other that way. So, let's see. So I'm from Bangladesh, and I was born and raised there up until my high school. So I moved to US in '99, right after my high school. I barely was 17. And I nicely decided to move into Mobile, Alabama, right? So think about a city like New York, 10 times more the people, minus the regulation. I go from there to Mobile, right? After 4 p.m., city is dead. I mean, there's nobody on the street, and you can't find somebody after 4 p.m. It was a tough one for me. Then I moved to Houston, and I've been to Houston since '99. So I bounced quite a bit. I worked with 4 different companies before I went to Shell. But I worked in New York, worked in California, and then I worked a little bit in New York, but I always came back to Houston. Houston has been my home. Married for 17 years with my wife, who I met as a freshman at the Houston Community College. Then we went to UFH together. Then I dropped out. She finished. I went to Exxon. So I dropped that, went to retail, which is T-Mobile. I worked with them for 4 years. And so I was a dropout for almost 5 years or so before I decided to go back to school. So during that, when I was working with T-Mobile, I started as a sales guy, but I finished as a regional manager. So 1/3 of Houston was mine. So I ended up running a 70 people group. And so I went from like a sales floor to that about 19 months. I was like a second fastest guy to move up in the corporate ladder. During that time, I met Dr. Harris. He was back then the department head for Prairie A&M electrical engineering. And for whatever reason, he was moving from Dallas to PV. I sold him phones and his family. We became friends. He was like, "Sure, when you want to go back, come to me." So when my wife graduated and T-Mobile, our company was bought out by T-Mobile, it's the School of Hard Knocks is great, but in a corporate world, that has a limitation. I saw that coming. So I went to PV, I went to Dr. Harris. By then he became the department, the head for the whole engineering department. So he took me under his wing. So I finished my engineering there. And my story for electrical engineering is coming from a sales guy. I still remember I went to Barnes and Noble. I picked up a book. It says top 10 highest paying job in the USA. I looked at the 4 years degree. Number 1 was electrical engineering. I said, "Oh, hell, I'm going to go study that one." So that's how I went to the electrical engineering. I didn't have a rhyme or reason for it. So I did my undergrad from Prairie A&M. Then I finished, went to Shell. I went to downstream refinery. So I thought I would be a electrical on the semiconductor side. So I designed that way at the VLSI, whoever's engineer here. So I thought I would work for TI, or Motorola, but I ended up being a refinery. I don't know how I got to refinery, but I loved the team. And I was not used to, I was not mentally, I was not ready for hard hats and boots and sweating and working and climbing up towers at 2 o'clock in the morning. I wasn't ready for it. But when I went in, it was kind of fun because everybody is watching over everybody, making sure nobody's making no dumb mistakes. Because at the end of the day, we live our life on somebody, right? When you walk underneath those pipes, we got benzene, we got H2Os, we got steams coming through. And if we have 3,000 people looking over 3,000 people to make sure everybody goes home, I really loved that part of it. So it was Exxon versus Shell, IT versus the engineering downstream. I took Shell and I stayed at Shell. So I first 6 years in the refinery, went in as electrical. When I left electrical, went to mechanical. I was good at electrical. I did what I did. Then I thought if I want to grow in the downstream, I need to be close to the process. So I went to the mechanical. I think I was only one engineer who left electrical, became a mechanical. So I worked as mechanical for 4 years. On the reliability side of it, hard side. So everything minus chemistry. So what it did for me was initially the learning curve was huge, like extremely tough. But after the year and a half, at the reliability engineers, whoever is out there, one of the coolest thing about them is that they teaches you how to take yourself out from who you are, put yourself in somebody else's shoes, and look at the world from their eyes. And that's the beauty of, I think that's something I still carry, right? As a reliability guy, I have to think about what electrical will do, what a mechanical will do, what a safety guy will say, what the control will say. But taking yourself out from your shoes, putting on somebody else's shoes and looking at the world that way, that was the coolest thing that we learned in that role. Then I did some crazy projects, decided I don't want to be engineer no more. I went to Rice, got my MBA. Then I went to your LNG team, which is what we call it BOM, Business Opportunity Managers. And so I ended up being a back carrier for another senior BOM who is running about a $3 billion capex at that point. Did the work for 9 months. I did my first deal there. We ended up looking at buying like a Houston Center Point up Northwest. That's a $150 million deal. I was the back end guy prepping him, and that gave me the first taste of the M&A. Then I went to the upstream strategy, unconventional team. And that's where I worked with Sinead Gorman for 4 years, which is our CFO right now. And I saw how she ran an organization, how she took an upside down business for the first time. So I could talk about it now. The business was worth on about $13 billion back then, but on book value of $18 billion. It was an upside down deal. And she took that organization, shook it, shake it to make it profitable in less than 3.5 years. And I was there working with her side by side. And my coolest thing is I debated her arm and a leg for Shell to run the unconventional business as an XTO with Exxon model. It just get out from us running it, let the other party runs it, because if you want to build a cheap car and reliable car, go hire the Toyota Corolla engineers. Do not hire the Ferrari engineers. So that's my coolest 4 years at Shell. From there, I went to the integrated gas, running at a portfolio appraisal, and then I went to downstream back again. So in the refinery as a finance manager, running the chemical side of it, which we sold to Pemex about 3 years ago. And during that transition, I moved back to the upstream global deepwater. That's where I went to the Mike's Corp. So global deepwater, we have a big portfolio, rolls up to the US and Mexico. It's about $23 billion. I was the back carrier for the CFO of the business. Around that time, my wife, she wanted to come home full time. So my retirement plan was with my wife that she's going to be a head honcho at some point in time, and I'll come home and be a stay-home dad. She's good. So I married up. So on that note, I said, well, at some point after our second kid, she said, I want to come home. And then we redid the whole thing. And I remember I went to a meeting in Canada at a portfolio meeting. It was me and my boss and Sinead, another person. I was 34. My boss was 37. Sinead was 30. She was 41. And the other gentleman was over 50s. What I realized is that what I wanted to be at Shell, I started Shell late at 28. I had a fantastic life at Shell. And, Shell made me who I am today almost. So I owe big time. So I had a time in Shell did fantastic. So if you want to pick a culture, Conoco and Shell will be the best place to go. So anyways, back to it, what I realized I need to do something to get to where I want to get to. And this is the first time I decided to come back to real estate. By that time, I did 2 startups. So real estate, I started my first company in the real estate, which I still have it. We buy residential, but high frequency. That means we trade about 60 to 80 properties a year. But till last year, this year will be different. I don't know how that's going to go. And that's what it is. So we are data heavy. We're tech first real estate company. Think about million texts, 700,000 phone numbers, 60, 70 properties, only 3 people. It's not a whole lot of people too. So it has a way to it. So, and that was my first flavor. And just like everybody else, I did my first rehab. I still remember I'm going to work to negotiate with the Canadian government, hundreds of millions of dollars. I come home, pull up my spreadsheet, and I have to think about why my GC is running a $20 tab extra on me. Then I got to show up on the weekend, look at the and all those numbers and this stuff like that. So I did that. And then someone says, Shirai, if you can buy 7, maybe you get economical scale. So first year I bought 17 properties. Second year I bought 34. Third year I bought 50 something. And the last year I bought 70 something. But at the end of the day, margin is good, but the scalability is tough. It is just rough. And it's a transaction heavy. That means if I get hit by a bus, the whole business is gone. There's no structure on there. So that's where I was thinking about, building a private equity company and multifamily. It doesn't matter how we underwrite it. Multifamily is the biggest weight. And everything kind of makes sense, right? So I came into the multifamily, not in terms of I want to buy multifamily because everybody said so. I came into multifamily because scalability, efficiency, and path to grow, it's there. And when we came in, I know quite a bit of people before I came into multifamily who are senior operators per se, which is 300-400 millions. You've been in the business for 5, 6, 7 years. You have done quite a bit of transaction, right? So based on them, what I understand is that playing solo will be extremely tough. So first thing we did, we went for the team, right? Let's build the team. Let's build the platform. Let's build the grounding. So everybody takes a hit, but less. And that's where the team mentality came in at all time. And that's where we do everything on a team basis. It's a team first, a second type mindset that we have. And then that's what got me to multifamily. And I'm active in the multifamily. And Mike, everybody else, we're full-time multifamily. We partner with, at least inside the multifamily, inside the massive team, we want everybody to be full-time. So that's the way we kind of look at it. So that's my story. Mike, back to you. Mike is like, hold on.
I'm muted. So, thanks. I just didn't want. Thanks, Shirai. No, great story. I mean, your story and just, I think everybody is, we have some awesome, stories and just what, makes this work. is really the community, the commitment that we have or that people have, and working together and knowing that it takes partnerships to do all this going forward, and I see a lot of our partners on here, as well. I see Ethan has joined us as well tonight, so it's good to see him on here. But one of the things I want to, I guess, talk about with this real quick then is, how should I start, into real estate is for some people, and maybe some are already there. And it's like, how do I go to the next steps, right? And as I mentioned, being a GP or general partner or active investor may not be the right thing for everyone. Because there is a lot of work, and I think one of the things that gets sold is that this is an easy, make money fast type program, and that's not necessarily the case. It's a lot of work. You're buying, think about buying a 50-60 million dollar asset. You're basically, $50-60 million business that you're buying that you need to operate. So a lot of things that need to be, considered through that. Also, like setting expectations, a lot of us, may have not set the right expectations. Like, hey, I want to work with an experienced partner, but I want to learn, right? Sometimes those two can't go together, right? I can not necessarily learn from, the experienced partner because they don't have the time anymore, but they've got a lot of track record. So I got to figure that out as well. And then I think I see another one is a lot of times people don't agree. Besides vetting the team, it's agreeing with the team on what that partnership looks like up front. Like, what am I going to get? What am I going to do? What are you going to get? What are you going to do? And that could be like 4 or 5 of us in that discussion. Like, how are we splitting this? How are we dividing this work up? And how are we getting compensated? That's on the general partner side. And on the, many of us started. So I know Schreier says he's not an LP, and others like, hey, I'm not a limited partner. But many of us started as limited partner, meaning a limited partner is a passive investor. So I invest into somebody else's opportunity or somebody else's deal. And that's how I started. I think it's actually still believe it's a great way to start and really kind of let you know of like, hey, I like this. I don't like this. I'm figuring this out. I want to do more. I want to do less or whatever, but it's a great stepping in point for many people. And a lot of the same things, though, is just, there is cash flow that comes with it, but, I think some people count on it too much and it gets oversold on the cash flow piece of that initially. It's usually a cycle. Like I got to go through a 2, 3, 4 years of cycle. So Trevor, you got any other thoughts on that? Or
yeah, so one of the things, how did you get comfortable? I mean, because it's a big jump to go from putting your money where we think it's safe and we think it's good, right? Stock market, 401k. I mean, we're all taught those are good things to put our money. Later we learn maybe they're not. What triggered you to go, okay, now I need to switch from doing what's traditional, what 90% of America is doing, and I need to switch over to real estate? What gave you the confidence to trigger that switch?
So to me, the true confidence comes in, it comes back to actually a bit of that investing in myself. So I invested in myself concept and went to a few seminars, real estate courses, trainings, and learned better about it and spent some time and money understanding and following it and determining that made sense to me, and that it worked correctly and that I could make it work myself. So the biggest thing really I'd say, Trevor, was just that piece of gaining the knowledge around it and building that knowledge up, and then being able to understand. I can understand the market of raising rents and the process and how interest rates work, versus I don't really have a tangible feeling of what pushes up or down the market of a stock or a Bitcoin. So,
Okay. And Shar,
Sure.
I know for a while you did some stuff on your own, right? House flipping on your own. When did you realize that real estate actually is better done as a team sport and you need to find good partners?
2019, no, 18, because, so I'll give a little context wise, and that question is a loaded question for me. Because, all of us, we start in the, I mean, not almost, I mean, a good chunk of us, we start on the resi side. The biggest difference resi and a commercial will be the mindset. Mindset in a sense, on the resi side, almost everything it's about me. I buy the deal, I take the loan, I do the rehab, I refi, I do borrow strategy, everything stays with me, and I pay down the debt and I go. Versus the commercial side, it's my partner first. If I can make my partner happy, if I can make them money, if they make it, then by design, I made it. Even though I don't need them in the first deal, but deal is going to happen second, third, fourth one. They're going to be there. They're going to back me up. And and that is a sophisticated market. And any mistake that I do, I have to pay for it. And if I have the right partner with the right skill set, it is better. So we see that in the corporate side. And the moment I start thinking about a scale, $3, $4, $5, $10, $15 million, and that's what's really kicked in. Because to me, I tell every time, I don't buy properties, I buy companies, right? We buy risk associated with the company. We're risk managers. And if let's say, if I'm 40 working in a corporate and I run a P&L, or I don't run a P&L, and I believe I can be a COO of a $10 million company running the whole show in 6 months out, it is great. The belief is great, but there's a lot of risk associated with it. Without a team with the right setup, we have to mitigate the risk, right? So for me, as soon as I saw that, I was like, yeah, it's not a me heavy, right? It is a us heavy, it's a my partner heavy, and especially partner with the right skill set. And going back to the point, someone has to say, I've been there, done that. And that otherwise taking a risk on such a big dollar amount, the market's gonna get me in the wrong spots. As soon as we saw that, I was like, it's a team. We need the right skill set. So I'm proud to say our team was built not on relationship. Our team was built on a skill set first, and relationship came afterwards. It's not like, hey, I like hanging out with Mike and let's go do a deal. It's like, no, Sanjay had a particular role to play, I have a role to play, Mike has a role to play. And then we got into relationship. So that's to me, for us to grow, you have to manage risk and entrepreneurial skill, entrepreneurship, mindset. Everybody should have it, but everybody should not be an entrepreneur. It's just there. Let me be the bad guy to say it, right? We have to have the mindset to grow at my corporate world, at my school, at my whatever it is. If we don't have the framework of push and get the next one, then we're not going to go anywhere in our life. Luck is there, but we're not going to do it. But it does not mean that I go out there, fight everybody else, right? I fight the market. So team is very important for whatever that we do inside the corporate, outside the corporate, mitigates a lot of risk. And it just makes things easier, de-risks everything else. That's my story why I want a team first. Mike, back to you, man.
Yeah, do you have a different perspective on that, Mike?
No, not really. It's not any different necessarily. I mean, the whole team thing is. I spent one, I've spent some time trying, vetting things, and I think it does make a lot of sense when you figure out like what fits and what works, right? And it's a combination to me of those skill sets and the time commitment, right? I think whether you're on the same level, like I know we have a group that we work with, Freedom Chasers, and they all have W-2s, so they all know they're on the same time set, right? They have a similar time commitment they can make, and we're kind of the flip side of that we all are full-time, so we have the same time commitment we can make, and then the time commitment is there, and the skill sets come along, and it just has worked out really well for us on that. And I've been sharing some different screen shares and the reason is just to get an idea for people to look like, hey, this is the stuff that you got to go through when you're after you've closed a deal, or in the process, of things. So just continue to share. And I threw one thing in here. This was from last week, Shariah. This, I don't know if you feel like
Yes.
talking about this, and then this can be kind of the closing thing, and then we can see what question, if anybody has any questions, they want to raise their hand, just to talk about like joining a team or moving, you don't have to go full time. It doesn't mean you have to just because we did. It just means we did because we chose to. And there's different ways, and I think there's a lot of ways to join a team that even it makes more sense to be part-time, depending on what you're going to do on that team. So have those discussions and figure out like what maybe is a good fit for you. So go ahead, Shariah.
Mike, I mean, just to kind of add on that one, in us full-time means that if full-time, I mean, if I have 5 people, everybody pitching in, let's say 4 people, everybody pitching in 5 or 10 hours a week, in general, we have 40 hours allocated for a project. So as long as you have ample time to run and maintain a property the right way, you do 5 hours, somebody else done 30 hours, no big deal, but make sure that you have the right support for the right project before it starts stacking up, right? It gets interesting. Because the constraint that we get into is the time, right? So that's that. Now back to this one. It was interesting. I was looking at the market failure and where we at, and the question is, I was looking for confidence level that do I feel worried about 3 banks failures, or it is just the process it is, and what is it financially I could kind of get to a point we feel comfortable, right? The first thing is, as you know, from our perspective, inflation is like a cancer. The first round of chemo happened, system is rejecting, some part of the body is failing. By design, some of the banks are going to go belly up. Exactly what's going to go, we didn't know, but here we go. We have 1, 2, 3 banks, right? So it is expected for something to go down. That's what happened. Now, back to that, then second question is, how big is the failure? So the chart in the middle, if you look at 2009, 10, 11, it's 157 banks failed, 11, then 140, then 25. So roughly 300 banks failed to get 300 and 400 and 500, 600 billion dollars worth of money. And then here on the far right, we have 2 banks, not the first, not the third one yet. 2 banks failed. It was a week old, about 300 billion dollars. Now on that note, if you take care of the inflation out here and bring that money back to 2008 money, it's about a little more than half of that. So 2008, 2009, we lost around almost $1 billion, almost 3/4 of $1 billion. With the same view, we lost around 200 billion. So it's not a whole lot. So the market it was a big pause in the market, but it's not crushing and burning it down. And that's also, you'll see how the market is pricing it. So our point is, it's a business as usual. There are a couple of more failures is going to happen. Exactly where, we don't know. Seems to be tech sector is getting impacted the most, but that's where it's going to have a bigger issue, and the failing the banks is the norm. On the flip side, us as a user of the system, we have a duty of making sure our 250 grand stays underneath. In this case, Feds are backing everything up. That's a proxy of another inflation. So we pumped the money directly during the COVID time, as you guys know. And here we're pumping the money via the bank. So not directly on our hands, to the users, right? So it's a secondary inflation coming in. That's what it tells us. The rate may be higher for longer, no rate discount maybe this year or something like that. But we'll see how it goes. Point that I took away, or for everybody else here, at least if you ask me, the opinions that even though the bank failures are there, don't sweat over it. 1 or 2 or 3 will pop, but Fed's not gonna let the build any kind of a negative tone on the financial system, because financial system is the worst kind of recession we could have. So I think you're safe from that perspective. So go about your way. If you have a loss, fine, go play again, work your way out, right? Don't be gun shy about it. So that's the slide that that's how I read this slide. Like,
Thank you.
yeah, so lending is going to be tough for the next couple of months, but we should be back up and running again pretty soon.
If anyone has any questions, raise your hand, put them in the chat. They did such a good job telling their life story.
I see some oil and gas. That's pretty cool.
So just a reminder, we do this every Wednesday. If you enjoyed yourself, please invite someone else to come and join us. Our goal is to provide good, solid education in a place where you can learn and ask questions. And as Mike mentioned, we got a lot of programs coming up because you want to make sure that you get educated about the real estate space before you even start passively investing.
Thank you,
Mike,
Trevor.
you need to talk about the more story about the rescue mission,
The what?
how the whole Libya played out.
Oh, yeah. I mean, it's so appreciate y'all, and I'll share a little more. That's kind of interesting story, I guess. But they actually both were a little bit interesting. So as having been evacuated from two places, and it's very interesting. My nephew worked or is part of the armed services, and he's like, yeah, he's like, man, I've been to some bad places, but at least I'm usually armed and ready for it. And it's like, you know, be careful there. But the one in Libya was, we were actually scheduled to fly out like a couple days or a day before everything kind of went sideways, and they started canceling all the flights, and we got stuck there. And eventually, fortunately, we were able to get out. We got stuck for a while. My company and a couple others that, you know, brought in some like black ops type people from, you know, sort of not black ops, but from, you know, that type of thing, but from a general contractor, you know, mercenary style, but, you know, not coming in to kill people, coming in to rescue people. And they come in, and we're at the airport, and we're carrying around like suitcases, duffel bags of cash to pay off the everybody as we're going through the airport, you know, process, and waiting for them to let the plane land, then let the plane get boarded, and then let us take off. And it was quite an interesting ordeal. And then I went back almost a year later, and it's very interesting. The apartment, like I went into the apartment, it was broken into, but like nothing was messed up. Like they took what they needed. Like they didn't tear up things, they didn't break things. Like picture frames were still up or setting up and things like that. They took shoes, they took small appliances, things that they needed for survival, basically. Left all like my son's stuff and things like that. So yeah, it's been interesting, it's been fun, and love to share and hear more of anybody else's journeys. And we're kind of going to jump into the after party now. And you know, so stick around if you guys just want to chit chat with us for another, you know, 15-20 minutes. Feel free to just join in. We're just gonna hang out here and talk. And it doesn't have to be about the topic, it can be about any subject that you guys want to cover tonight or that we didn't get to. So chime in. Lev, if you got anything to share?
There's a question in the chat. How did the swing in the oil and gas industry affect your careers?
Mike, you go first, and I'll go afterwards.
I mean, so it didn't, I guess that was part of my reason to finally decide to step away, even though it didn't affect my career. You know, it was almost between ConocoPhillips and Schlumberger that I worked for. You know, it was kind of like every cycle, you know, and sometimes even mini cycles, the small ones, the small incremental cycles, there was layoffs. Like there was layoff and then you're okay, and then there's layoffs and then you're okay. So I think eventually it affected the mindset around it more than it did the actual career of it. And I wasn't, for me, I was not focused as much career. I was like living the international life and just really enjoying life rather than pursuing career at the time. So, Schreier?
Yeah, I'm the polar opposite. I went after it. I wanted to get to certain place at a certain age, at a certain speed, and I went after it. So yes, I survived. I went through 3 down cycles, no, 4, 2013, 17, 19, and the most recent one. And but every time we made it through fine, depending on the team and the layer and the people that you know. Yeah, it was fine. But what I saw, one of the reasons that I saw, to me, upstream, it's a shrinking industry. It is going to be like a tobacco industry. And for us to grow, if the company is shrinking, we can't grow as fast, right? So that was one of the reasons that I saw. And the second thing, once you go to the 3 down cycles, then I run another scenario. Okay, what if I choose to stay? And let's say I make it through, but if I don't get the bumps that I want, what's going to happen 4 years out, 5 years out? When I those two put together, it made sense from the risking perspective. Look at outside, and we kind of go. So that's how I left. So yeah, down cycle. It is, to me, down cycle. It happens. Every healthy company, unhealthy company, down cycle will happen. How we go through it's one, and also has time and a place for it. But I do understand on a large organization at us, like something like Fortune 40, 50. You have more than 50,000 people. What point in time in life we start, and that sets the stage of how far we go in general. And at 40, more or less, we are who we are. Maybe 1 or 2 bumps, that's it. So I started Shell as late 28. I had 4 promotions in less than 12 years. So I went pretty clockwise, bump. But at the end, I don't want to be in a shrinking industry, and where I have to think about surviving and not thriving. So that.
And yeah, and I think the other for me is just to share with a lot of people is just don't, wherever you are in your life, just keep your mind open. That was one of the things that I wasn't doing at one point. So keep your mind open and be, just consider what the alternatives are, and and just don't get stuck into like this is the only way. So I kind of ended up in that position for probably the last 5 years of my career while I was here in Houston. And it wasn't terrible, but it just was like not, wasn't the greatest thing either. And the opportunity came along, and I said, okay, let's move or move on. And then what I want to share, the second piece of that is I've kind of pivoted, started a new career, being an entrepreneur for the first time, after kind of 50 years of life. So it's a cool opportunity. It's kind of, it's exciting, exhilarating. It's a lot of work at the same time. So don't underestimate any of that, and just, be ready to, help others and accept help as you need it, right? Be willing to take the help. That's one of the things. Don't be too proud.
One thing too, and I was very stable, right? Same thing, same job for a long time, and then boom, next thing you know, COVID happened, and I got a phone call, and I'd already started investing, but the realization that I'd spent 58 years of my life trading time for money, and I didn't have my money working for me as well as it should have, was a super shock for me. And again, buy real estate and wait, don't wait. I didn't start investing until my late 50s. And boy, I wish I had started early.
That it's a mindset, man. I struggle so much. Just like everybody, especially Mike and you, Trevor. It's that. And the coolest thing was when I asked for 1 year sabbatical, I was replaced in 2 days, if that, right? Almost instantaneous replacement. And that was the thing. At the end of the day, we're just another employee, and which is rightfully so, right? On the flip side, that having an external view is extremely important. I would say at the corporate world, the whole golden handshake kicks in 10, 15, 20 years out. You're comfortable, check comes in, you take a vacation, you're efficient, and that kicks in. And the transition is tough, but if you can make it through, the other side is pretty interesting. So knowing what I do know now, I was like, Shariah, you should have done that like X million years ago.
Yeah.
It's just too late. But again, on that note,
I say that message every time I can, right? Don't wait. Don't wait. Because I waited. I looked and I waited, and I was frozen. Didn't really, and if again, I know the story now. And so it's just gonna take me a little longer, but it's huge.
again, on that note though, right? I don't know how you guys feel about it. I feel like that for us to do something different or something, we gotta play with our strength. And a strength means something that we're extremely good at, which is above average performer, right? Trevor, we know you, right? Mike, you know you. I mean, it's like everybody has performed way above average level for a particular thing, and you kind of run with that, right? Would you say that we should have a good eye on what the specialty is, and then kind of build that one up instead of fixing what's broken?
Yeah, yeah. No, and not trying to be, that was one of the things I learned. Don't try to, not trying to be something you're not, or especially to start with, and do what you're good at and just improve on that. Even if it's changed, even in a different sector. For sure. Cool. Well, anyone else has
Good question, Lev. Lev's story is pretty cool too. So we should have
That's
him
why I
tell
was-
us his.
I was calling on him. He's the only other. There may be others in here, I'm sure, but
I heard somebody.
that's our other big oil and gas guy.
I'll talk. My story is a little bit different in oil and gas than your guys's. I'm more on the operation side, work over rigs, work on the oil wells. But my question for the downturns, that was for me is, being a business owner of oil and gas and hitting those downturns was seeing that collapse and like, man, you need something outside of, the specific business. And that's really where I started studying and, going through that same thing you guys talked about, the mindset shift, and learning, like where to put money. And, as I had that mindset shift for me, what really was a big push is there's a lot of people in oil and gas that make a lot of money. And out here, the people that I know and connect with, so many people still live paycheck to paycheck, even if they're making 250, 300,000 plus a year. And it's because, they have the big fancy house, the big boat, the camper, all the cool toys. And, so it's just, getting these guys the idea that, you have to kind of set yourself up first before you go into buying all the, all the toys. So that's what I got on it.
Awesome. Anyone else?
Sounds
They're all
good.
speechless.
Yeah, no,
I think Ethan's over there signing some loan documents. I'm not sure.
He's giving me homework.
We got some homework to do with. We gotta
That's
get,
right. Ethan is giving me homework. That's what he's doing.
But we'll get the message.
Yeah.
So Ethan, do you know this song by Dirt?
No, sorry guys, I have a slow scanner, so that I just got one of my clients got served with a lawsuit, so I'm scanning it for them. But no, I don't. There's a lot of pop culture that I never paid attention to. So
No, this is just interesting. It's called By Dirt. So when we're talking about a land deal, I thought it was kind of interesting. But we'll get back to you tonight. All right.
Awesome. Well, thanks everybody. Super happy you guys could come out. And again, every Wednesday night, 6 p.m. Central, invite your friends. Our goal is to give honest, share conversations about passively investing in real estate.
Forgot to post, and Trevor, did we have the deal flow? Did you have the link for that deal flow handy? No. We'll do it next time. We need to be sure we add our deal flow link.
Oh, I think I said, yeah.
That's okay. That's the one that Brad put together.
Yeah, I can find it here.
And then a lot of people will probably, not a lot of us, a lot of people will be in either Cardone this weekend or at Sumrock this weekend. So y'all have safe travels. Enjoy your your weekends, with your communities, multifamily?
Yes, so I posted that link in the chat. If you have a deal and you've done your due diligence on the deal and you want to submit it to Massive to look at, you can use that Google link and fill out all the details. Big part of what we're doing is partnering with people. That gives us a lot of advantages, having somebody local understands it, finds the deal. So we want to support people to be able to get to the next level.
This is so Mike, you live in town tomorrow?
Tomorrow night,
Tonight?
tomorrow night. Unless that doesn't work out and I leave Friday morning, but right now it's tomorrow night.
Keep the plan, man. Don't swing it.
We'll see. We'll see how it
It was a
goes.
rough one today, so keep the plan. We
Yeah,
need Brooks. Brooke is not here. We need some good vibes. Brooke is fine.
yeah. No, it's good vibes, man. We're good. I was thinking that some upcoming webinars here, is probably like we could, shift towards like you and Brad, or Brad and Sanjay doing like an underwriting call and talking about our process and how we're doing,
That'd be good, though.
what has changed for us and where we're headed with things. So I think that'll be a really interesting topic for a lot of people.
Okay.
And and then eventually that'll start to tie into, bringing in, Senate and with some of the education plans and stuff like that. So,
Okay, yeah, that's a good idea. I think the Brad can do one, then Sanjay can do one, or they can do a couple of them as they kind of go through. Yeah, that'd be good. Yeah, that's fantastic. Let's do it. So
'cause I know a lot of people get excited. They'd love to see what's happening with underwriting, how to do deals, what's happening in the deal finding process, things like that.
Okay.
So,
Awesome.
and Carrie, thank you for joining us tonight. And I heard, Carrie, you had a great conversation with Sanjay today. He called me during the meeting. He was so excited.
Yeah, it was really good conversation, and he suggested I jump on here weekly and just get to know everybody and hear more about what Mass is offering. So I'm really excited to be here.
Thank you. Thank you.
Thank you.
Looking forward to working together.
Me
Trevor
too.
will start sending you some things as well, I think. So
Yep.
just take it as it comes. Don't, it may, so I know like sometimes initially, because we all like, hey, we got somebody new, let's send it all to them.
Little bits.
So we talked about that as well.
Cool. All right. Thank you.
this is
Well,
Awesome.
thank you. Did you meet with Brad as well? Oh, yeah, you did. I
Yeah,
saw the picture. Good.
Yeah, it was fun.
Good. Okay, thank you. Thanks for joining us.
Absolutely.
Okay, good night.
Mike. I talked to Al. On the Al, he needs to talk to Brad as well. He went through all the Houston deals today, and he saw his
Yeah, I
thing.
saw a note on that, but
I love that note. I was like, man, come on, I'm gonna clean the house. Makes a lot of sense.
yeah.
Sounds good. Thank you. Thanks,
Awesome.
everybody.
Well, good
All right.
night,
All right,
everybody.
Mike.
Thanks a lot.
Nice.
See
Good
you
night, buddy.
next Wednesday.
Thanks, Trevor and everyone else. Well, we'll see you in a bit.